time for the Property Podcast, where every week tens of thousands of property investors, new and experienced, join together to get news, knowledge and laughs at our expense. With me, Rob Bence.
And me, Rob Dix. Join us every Thursday morning for your weekly dose of property ideas and motivation. Then head over to our website at thepropertypodcast.com to keep the conversation going. Now though, let's get started.
Hello and welcome to the Property Podcast. It's episode 31. I'm Rob Bence, and with me every week is the property geek, Rob Dix. Good morning, Rob. How are you?
Good morning. Very well, thank you. This week, we are talking about how to research any property investment. We're going to be making an argument for why you should be thinking research, rather than location. Also, we've got an interesting news story. We've got an interesting property that could be of interest to you if you're in the market for something to rent for yourself. And not just one resource of the week, but 15. So all of that is coming up.
Okay, but before we get started, every week we like to thank the wonderful, outstanding, splendid people who leave us reviews. And this week is no different. First up, Andy says, amazing resource for every property investor and landlord. Excellent presented and packed full of practical information, covering a whole range of topics. You'll be inspired by the goals episode, number 15. And I love the resource of the week. Don't forget to subscribe to the other podcasts from Rob and Rob, the Property Geek Podcast and the Property News Radio. Thank you, Andy. That's a great review. Next is Kumar, and he says, great. Goldmine to be precise. I'm looking into property investment, and I think this is the single most efficient source of information on property investment out there. You guys are immediately likable. Keep up the good work. Well, thank you very much, Kumar. And finally, To Inspire says, transition. After spending years in analysis paralysis, I'm now ready to take a leap of faith into the world of property development/investment. The Property Podcast has helped me to give me the tools to carry out the research in order to build a secure business by minimizing the risks and tapping into resources to enable me to add quality to my future projects. Thank you very much for the podcasts. Well, you're all very welcome. And To Inspire, I think you're going to love this episode.
Hopefully so. But before we get into that, Rob, let's talk about what we've been up to. I know you've been really busy.
Yeah, it's all work, but all fun stuff. The property investment deals, it's not like a catalogue. Somebody asked me this week if I had a catalogue of the investments. I wish it was like that, but it doesn't quite work like that. You never know when the next investment's going to come along. So we haven't had one for 3 weeks. And like buses, 2 have come at once. So one in London, one in Manchester. So it was all the work leading up to getting that deal done, contracts, etc. Then putting all the research pack for our investors, then telling all the investors about it. So that's really what's been consuming me for the last week more than anything. But the recruitment drive is really going well. Thank you to everybody who's applied so far. We'll be coming back to you the end of October. So many applicants, so many wonderful applicants as well. Lots of interesting CVs from a wide range of backgrounds. You know, there's some property there, but there's some really other interesting career paths people have taken that I think really could transition well into property investment. So you've still got time. I think if you listen to this and you are interested, go to rmpproperty.com/property investment jobs, or just jump on rmpproperty.com and look for the link towards the bottom of the page. It'd be great to get your CV in too. We're based in North London. Well, that's where we will be based, because that leads into my last thing we've been doing. We need bigger space, office space. So we're on the move and we're looking around the North London region. So it'll be very close to transport links, as you would expect, because I look for the fundamentals. That's been my week. Quiet one, really, Rob.
I can see why you need the help. It sounds like you've been flat out.
It's been fun, though. I enjoy it. It's good busy. What about yourself? What have you been up to?
I've been up in Norwich. I've been meeting some lovely people up there. Had a few meetings the other day. Also, as you were, at the Property Investor Show at Excel on Friday, having a nose around, seeing what was going on there. Lots of international stuff as ever, but lots of UK-based companies there and seminars and so forth. Every year it's the debate about whether to trek all the way to East London, at the end of the earth, to the Excel in Docklands. But worth it as usual. I'm glad I made the journey.
Yeah, it was good to catch up.
Yeah, definitely. All right, well, you've dug out another news story for us. What have you got?
Well, as I've been researching London rents the last week or so, I've seen this news story in the Telegraph, and for a 1-bed in Zone 1 London, you know, maybe a 2-bed, you're looking at way over 3,000 a month. You know, people outside of London, yes, it's true, I'm not exaggerating, jump on Rightmove. But I've seen an alternative, Rob, if you're willing to commute.
Oh yeah, what's that?
It's your own house on its own island with a jetty, a boathouse, views of the Lake District, and even a mock chapel.
That's going to cost a bit, isn't it?
Well, it's about 3,000 a month as well. So you can have a 1-bedroom flat in central London, or your own massive detached house on a private island with your own jetty, boathouse, views of the Lake District, and your mock chapel if needed.
Wow. So I'm just having a little look of the news story now you brought it up. The thing that puts me off is you're not allowed to land your helicopter there, which is always a deal breaker for me. I always have to have this discussion every time I rent somewhere. Also, you have to go to the mainland to put the bins out. Imagine the hassle of that. I'm going to stick with London.
I struggle to get down the driveway to do it, so...
Yeah, about 5 different recycling bins. Nah, forget it. I'm not going to get the boat over with all those.
Looking at a rough estimation on the commute time, though, I'm looking at that lake. I reckon that's a good 10 minutes. Then the car journey to the local station's probably another 10 minutes. The station to a mainline station's a good 45 minutes, so best part of an hour. And then 5 hours to London, and then a walk, maybe 15 minutes. So I'm not prepared probably to do the 10-hour round trip commute daily just yet.
But it's worth looking into. Always worth broadening your horizons.
But if, unlike me, you're not handcuffed to London through work, then you can have a look at this property if you're willing to spend that much money. But it is incredible. It's just amazing the difference you can get for your money. And it's an absolutely stunning property. So have a look at the show notes and you can see for yourself. So this week, we're looking at how to research any property investment. This is really easy for me this week because I've been doing it nonstop. So it was very quick to put the show notes together. Okay, so why research? Well, I know it sounds silly, but some people don't. Research is the most important thing you can do when looking at any property investment. It's where you should spend most of your time. It shouldn't be dreaming about your profits. It should be spent on your research, because research not only will make you money, it could save you vast amount of money from massive mistakes. The horror stories in property, sometimes it's people being unlucky, but the majority of times, it's lack of research. And, I think most people who've had a nightmare property situation happen will put their hands up and say, if I did a bit more research, I probably could have avoided that. How do we go about research? Well, there's a few ways of doing it. First off, you can do an initial sort of overview. You look at the property investment and you go, is this worth looking into any further? And then if it is, you move on. And after that, you've got really 3 levels. You start on the internet, you go to the phone, and then you get your shoes out and you get on the street. So we're going to run through all the processes, lots of things you can look out for to do. We're going to list them out in the show notes as well. There's going to be a link to a blog I've put on RMP Property, 48 things you can check when investing in a property, so things to research. And also, if anyone's interested in having a research pack from me, an example copy that we use at RMP, just for your own interest, then please do get in touch. I'd be more than happy to send it. But let's have a look. Okay, so first of all, Rob, the quick checklist. This is a time saver.
Yeah, so 3 levels of analysis coming up. But to save yourself going into these 50-odd factors we're going to list out, a few quick things you can do to see if it's worth going any further. So for the purposes of this example, we're going to assume that someone has approached you with an investment opportunity, telling you about a potential investment that's in an area that you're not very familiar with. So a lot of the time this won't happen. You're going to know an area and you'll have targeted that for a specific reason and be looking for investments within that. But so we can cover everything, we're going to assume that someone's just told you about an opportunity in an area you don't know that well. So here's a quick checklist. Firstly, is the area in or close to a major town or city? I'm sure you can invest in rural property, but I don't personally know anyone who does it, and I wouldn't want to, because you want to have the rental demand, and the rental demand is clustered around things that are found in major towns or cities. So that's check number 1. Next one is, does the property look like a good deal? Is it below market value, if that's what you're looking for, or does it in some way meet the whatever criteria you've set out, based on a rough kind of numerical overview of the kind of thing you're looking for, without wasting lots of time digging right in straight away? The third factor is getting on Google Street View. Google Street View covers the vast majority of the UK, and getting on there could save you a lot of time. Because, okay, the numbers might look okay, but if you look on Street View and it's next door to an abattoir or something, however good the numbers are, think about the trouble you're going to have letting that out. If you don't have the stomach to do millions of viewings and have everyone put off by it, it's just going to be too much work for you. So you can figure that out on Street View before you go any further at all. And lastly, think about your gut instinct. We've talked about this before. There's something to gut instinct. Whatever it is, whether it's your subconscious kind of telling you something, if something feels wrong, either just when you're having a look at the deal or in the way it's been presented to you or the person who's presenting it, whatever it is, if something feels wrong, it's worth paying attention to. So that's your quick checklist. If you get through that and there doesn't seem to be anything glaringly wrong, then you move on to the first of the 3 levels of research, which is getting onto the internet.
Yeah, the internet. And actually, true story, Rob, the Google Street View, that saved me massive amounts of time once. I got the numbers of an investment. It looked absolutely fantastic. You could say almost too good to be true. And, I'm used to seeing good deals. And I looked at the numbers. Yeah, major town and city. Yeah, it was a commuter town. Jumped on Google Street View next to a massive tyre shop. And it was more of a yard than a shop. That could be a quick maneuver to save you a lot of time. Okay, so if everything's looking good, we move on to the internet. One of the first things you can do is jump on Rightmove or Zoopla and have a look at the current asking prices for the area, the current purchase prices. So if you've been offered a property and it's at 80,000 for a 2-bed house, what are other 2-bed houses in similar condition going for? It starts to give you an idea, and like all these points, it's not going to tell you if it's a good investment, that one point on its own, but it's about building a bigger picture. And that certainly can help you start that. Next is look on for the rental asking prices. Now, bear in mind, these are asking prices, so it doesn't necessarily mean what they're going to go for. This is just a guide. It's about that bigger picture. Have a look at the asking prices for property in the local area. Now, when you're doing that Rightmove search, make sure you're searching close by and like for like. A property 3 miles away is not going to be comparable. Or if your property is a bit run down, comparing it to a property that is brand new is not a like for like either, unless you're going to spend money doing it up. Just make sure it's very close by. Start with a 1/4 mile radius and then move out to 1/2 mile if needed, and make sure it's like for like. When on Rightmove, another search you can do is there's a little button you can click which says sold subject to contract, or STC. If you click on that button, you can see what properties have been renting for, get an idea what prices they've gone for, and also what properties have sold for as well. So sold subject to contract, have a look at that, click the button. It's on the search bar, so just have a look next time you're there, you'll see it, and that too is worth doing. Next up, check the land registry. So yes, it's good to see what the asking prices are, but even better is seeing what the prices have gone for. So you want to see properties that have recently sold in that area. If there are some, then great. If there are not, why not? Is this area quite rural? Is the market not fluid? Why aren't there comparables in and around this area? That might be a warning sign to you. So look at the land registry, look at what properties similar to yours are going for, and if it stacks up, continue on your search. Okay, next up, have a look for any investment that's planned for the local area. Reason why, this could boost rental and property prices. It's really easy to do. Just jump on Google, and if it's Manchester, type Manchester investment. And then if you're, a suburb of Manchester, then you might research that suburb as well. You'd be surprised how much is out there. Google is a powerful tool, and it doesn't take a lot of digging to see if there is any investment out there. If there is, it'll be documented on Google. It may have just finished or it may be coming up, but it's always worth looking for, because that could be another tick in the box for you. Next, what are the local unemployment levels? Are they higher or lower than average? We'll link to some of the resources you can use in the show notes. So don't worry if you're thinking, where can I find this information? Go to thepropertypodcast.com, go to episode 31. All the links will be there, but there's a link there for searching employment levels in the area, what the average is, and where your area sits. Is it above average or below average? Again, if it's lower than average, then that might be an area of concern for you. What is the area's credit rating? Again, this can give you a guide to the type of area you're looking at. There's a great website, again, we'll pop it in the show notes, that you can type in the postcode and it'll tell you the local credit rating from 1 to 999. It'll tell you what the average is, which I think is 700 and something. And it'll tell you exactly where your area sits, above or below it. Again, not one piece of information that can make a decision, but as part of building up a bigger picture, it's really useful. What are the local transport links like? Where's the nearest train station? It might be great if that town or city has a good train station with great links, but if you're 3 miles away from it, then it's not quite as good. So how far away from you are you from those train stations? And not quite as good, but always important to look for, is bus stops. Can the people renting your property get a bus nearby? Or is it a massive walkaway? Or are they infrequent? Is it semi-rural where you are and there's only 3 buses a day? Where I live, the buses come, when they feel like it. It's not very often at all. So, where I live is not a good area for investments. And then other things you can look at, local hospitals. Well, why? Great source for tenants, and very similar to that, universities as well. Because you may not want to lend to students, but those students often stay on in those cities and become young professionals. And there's plenty of people who work in the universities as well. Again, having a university or a few universities in the city is no bad thing, and in my opinion, can only be considered a good thing.
Okay, well, let's keep on with looking at more fundamentals and more things that tenants are going to care about and going to make the property easy to let. First of all, big one, primary and secondary schools. We've talked about this before. Schools are really important to families. And if you get tenants who've got kids in a local school, they're very likely to stay for a good few years. And that's what you want. You want good long-term tenants, which are going to minimize your voids. So schools are really important. Also, more kind of seemingly mundane things like how far is it to the local convenience store? If you're going to have to walk for 15 minutes to get a pint of milk, that's going to get annoying. Little things like that tenants are going to care about. And then bigger than that, local supermarket. Is there a supermarket nearby? If it's walkable and you can walk home with your bags, then fantastic. If not, then is it on one of the transport routes that we talked about earlier?
Because not everyone's as efficient as you, Rob. They don't do, weekly scheduled online shops. So I know you're very systemized when it comes to these things, and very impressively so, I might add. But some people do like to walk to the supermarket still.
It's true. I mean, they are wrong to do so. They're wasting lots of their time. But until everyone listens to me, this is still an important factor. Now, one more that's up my street. How far is your nearest international airport? Now you're talking. When I was in Norwich, I was being shown some properties that you could literally walk 5 minutes to the airport and fly off to Europe and get connections from Amsterdam. Amazing. I'm sure there'll be flight path issues to think about and things like that. You want to have a think about noise if you're right next to an airport. But, that's still a big tick in the box if that particular transport link is there. And then if the property's not actually in a major town or city, then how close is the nearest one? If you're looking at commutes, what's the travel time to that nearest town or city where those jobs and the major shops are going to be? Google Maps is actually great for this. They're adding new transport links all the time. So if you put in name of suburb to name of major city, then there's a good chance that in parts of the UK, it'll be able to pull up all the transport links for you already and tell you the public transport routes. If not, you'll be able to figure it out for yourself pretty easily. So combine that with how far the property is from the station or the bus stop or whatever to figure out how commutable it's going to be. That is a lot of the factors to do with the area. Then moving on to the property itself. What size is the property you're looking at? How does it compare to others in the market? How big are the bedrooms? How many receptions? Things like that. Parking, another really big one in most parts of the UK. Is there off-road parking? Is there on-road parking? If there's no parking and there are double yellow lines outside, that is going to be a real bugbear for people, and you might find it less lettable than a very similar property a street away where they can park right outside or on a driveway. Then getting into the real nitty-gritty. Is the property freehold or leasehold? This should be listed on Rightmove. If not, you should be able to tell. The whole thing about flats are leasehold and houses are freehold, not always true. I was reading a story the other day about someone who discovered that their house was leasehold and they had no idea until they were just about to exchange on it. If it is leasehold, how much is the ground rent and how much is the service charge? These are things that agents are really bad at knowing typically. You might have to do a bit of digging and find that out for yourself. When you get to know an area, you'll kind of get ideas and you'll be able to estimate things like that. But before you go too far, you'll want to find out those numbers and plug them into your calculations. Also, will you need to spend money on the property to get it into a lettable condition? And when was it last renovated? When were the electrics and the heating done and things like that? As we're sort of still on the internet at this point, you're not going to be able to know all of this necessarily, but you can tell a heck of a lot from a photo. So you can see if it looks tired and it's all 70s decor, maybe the electrics haven't been done since then and it's going to need a rewire. Or you can tell that it's been brand new and refurbished. All it's going to need is a bit of furniture or something. You can tell quite a lot from photos. Also, going outside, the garden. Are your tenants going to be willing to look after a large garden, or is there no garden at all and that's going to put off families who want somewhere for the kids to play? That's a factor as well. And then, can you add value to the property? If that's something that's part of your strategy, you can take a look at the floor plans often and look at Street View and kind of figure out if there might be scope for an extension or some other way of adding value so you can force that capital appreciation. And then, Rob, properties that are new build, I'd like to get your opinion on because there are certain certificates that you can ask for as well.
What you really want is NHBC certificates, which actually has the majority of the market share. Actually, met Neil recently. Hello, Neil. He works for the HBC. He came in to see me at RMP. So side note there. Sorry, Rob. And he was telling me some interesting things about the NHBC, how things are growing there and real sign of the property market. But NHBC is the big one. NHBC will guarantee the build quality of a development for up to 10 years. The first 2 years is covered by the developer and the remaining 8 is by the insurance the NHBC supply. The reason why it's really good is they go in and inspect the properties because if they're going to put, a guarantee on it for 10 years, they go in and inspect them and say, okay, let's have a look at this, how's the electrics, water, build quality, etc., and then they'll sign it off. So I used to work for a developer as well. That's how I started in property. And we used to have the LHBC inspectors come round. And then, of course, there are equivalents as well. There are others out there who will offer a guarantee. Companies like Zurich, I think Premier as well. But an HBC is the big one that most people know.
Okay. So that's a whole lot of factors that you can find out the answers to just by being on the internet. Don't have to talk to anyone or anything. But having satisfied yourself with all of those you want to, what's the next step? Okay,
so next level up, it's all looking good. Move to the phone. And really, most of the conversations are going to be with a letting agent and an estate agent. So the type of things you want to be doing. Well, first of all, mystery shop your local letting agent. One we've said before, and probably one letting agent's haters telling you to do. But ring them up and see, first of all, ring them up, mystery shop them as a potential tenant. So if you're looking at a 2-bed house, ring up saying you're looking at a 2-bed house. First of all, how do they treat you? Are they on the ball? Are they friendly? Are they, keen to get you in to show you the property, all the type of things you would want if they were speaking to potential tenants? And secondly, what are they saying? What price level are they telling you? Are they telling you maybe $500 a month? And then bring up as an investor, as a landlord and say, okay, I've got a 2-bed house. I'm looking to put it on the market, or I'm about to have a 2-bed house looking to put it on the market. What do you think the market's doing at the moment? And, what do you think I will get for the property? They might say, oh, yeah, it's really buoyant at the moment, which you would expect them to. And you can get $550. And the reason why you might get 2 different numbers is they're probably going to try and manage the expectations up of the tenant and manage the expectations down of the landlord. So the true number might be somewhere in the middle around 525. You might get a letting agent who just tells you straight and tells you it's 525, but it's always worth doing and always worth calling more than one. Ask them if the property is not let, how long do they think it's taking? What's the market doing at the moment? How quick do they think a turnaround will take? And say to them, if they give you that 550 number, say, okay, that's great. That might be top rent. But if I want this let in 2 weeks, what would I need to put it on for? It's a question they probably wouldn't get asked that often, but it really makes them think, and you often get an honest answer then, because they realise that what your motivation is. It's not to get the maximum rent, it's to get a tenant in quickly, which actually is more important. Think about it. If it takes you 2 months to get a tenant in at 550 or 2 weeks at 525, run the numbers. It's clearly better to get a tenant in 2 weeks at 525 because you've had 6 weeks with no rent. It's better to get someone in quickly at a reasonable fair rent than waiting out for a top rent. So say to them, if I wanted this let in 2 weeks or 7 days even, what price do I need to get it on for to get it let? So always a good question to ask. Now, if the property's already let, this one for the estate agents, if you're buying it from an estate agent, I know there's property companies and other things you can do. Ask them how long they've lived there. And are they good payers? Are they up to date with their payments? They might not be. And, the estate agent or the property investment company might not tell you because that might make the investment look less desirable. So ask the question. Make sure you know the answer. Don't just assume. If it's not let, ask the letting agents what type of tenants they expect to be renting to. You may see it as professionals, but they may see it as students. Don't just assume. Get an expert's opinion. And then ask them, will you need to get the property furnished to get it let? Always try to go unfurnished, but if that market dictates that furnished property is required, then go down that route. And if it does, add that cost to your cash flow. So that's a list of things you can start to ask when you get on the phone. And asking those questions will give you, based on all the internet research you've done, will give you a far better idea. But finally is the visit. So, you can do all the internet research and do all the phone, but finally, either have someone visit it for you, which I do. I have someone in my team visit it for you, or if it's one of my clients, we visit it for them, or you may want to visit yourself as well. But there are things to do when you get there, Rob.
Yeah, so the visit is non-negotiable, really. If you can't make it, if you're abroad or something, then if you've got someone, as Rob says, that you completely trust and who understands exactly what you're looking for, maybe that can take your place. But if possible, always best to be there and actually walk the streets around the property in question. The key thing here is to be walking around, putting yourself in the headspace of a potential tenant. As you're walking around, try actually walking the route to the nearest train station. You might not realise that it's up a really gigantic hill, and that's going to put off certain types of tenant, maybe people with young kids. Walk that route and see what it's like. If you do it at night, is it scary? Actually walk the route and see. And just as you walk around the streets at different times of day or night, you'll pick up things that no amount of research will ever be able to tell you just from doing desktop research. You'll really get a vibe about the kind of people who live there, about what the local economy is doing. You'll pick up on all these little signs, see what shops are there, see what shops are vacant, see what seems to be flourishing, and just kind of walk around as if you're a tenant and just think, how would this be if I lived here? And then, of course, there's visiting the property itself, because agents aren't allowed to make property photos on Rightmove or wherever misleading, but you still can't properly get to know what a property is like without visiting yourself. You won't be able to tell whether a bedroom necessarily feels pokey or spacious or whatever. Visit that property, see what it feels like, see what the layout's like, and have a really good poke around and see if there's anything that you can uncover that you should be worried about. Like Rob said, you don't have to be doing that yourself. You can have someone you trust to do that as long as you discuss beforehand exactly what it is that you're looking for. So that is the final part. It's a non-negotiable part, but a lot of the job you've been able to do before you have to do that far. So hopefully you're only going out on visits to things that are pretty hot prospects already based on everything you've done so far.
If you've done everything right before, this shouldn't be time wasted. This should be validating everything you've said. One to add in there, if the property's already let and you can't get in, you have to trust the person you're getting this from. So if you're getting this from an estate agent you have zero relationship with and you can't get in because the property's let, it's a warning sign. It's one just to be wary of. It's easier if it's a new build, because then really, unless the tenant's gone absolutely crazy and trust the place, then, you can see a new build will still be a new build, or nearly new. But if it's an older property and it's tenanted, then you really do need to get in and try and see it. And if they tell you can't and you have no relationship with the person you're dealing with, then 9 times out of 10, you're probably going to be walking away unless you can put into your cash flow that it may need a lot of work on the property. Don't assume that it's going to be ready to let straight away.
Okay, so to wrap it up then, as we said at the start, research rather than location. You're looking at the location, but you're also looking at a lot of other things as well. We've just listed nigh on 50 things that you can look at, the majority of which you don't have to even leave your desk to do, and so you shouldn't be wasting any time by the time you actually go out to take a look. But, of course, we've listed about 50 things. Are you going to be able to put a tick into every single box? Realistically, probably not. You're not going to find that amazing property that is in the perfect location. It's the perfect layout. It's got everything you're looking for. There is no perfect investment. You've got to take action. You've got to actually buy something if you want to be a property investor, rather than sitting there waiting for the absolute ideal thing to come along. But you'll kind of come to your own decisions about which of these factors you think are most important and put different weight on different factors. You're not going to find a property that's next door to a university and a hospital and a school, and there are no factories within miles. Oh, and a station, of course. It's just not going to happen. So you're going to be thinking about the type of tenant that you want to attract and kind of putting weight on different factors depending on that. Don't wait for something to be absolutely perfect, but if you've at least kind of gone down the checklist and considered all these things, you won't find at the end that there's some kind of real howler that you've made, that something that looks great on paper is actually going to be a nightmare for you in years to come because of something you forgot.
Hopefully you feel that there's lots sandwiched in there. We've tried to fit in as much value into this one as possible, but clearly, we've absolutely bombarded you with loads there. So remember, go to the show notes. There'll be a link to this list already. And if you're interested, just get in touch with me at RMP Property. And if you want an example, Big 50 report, which is the due diligence document we put together to give you a guide, For your own investments, don't feel like you have to use RMP. For your own investments, I'm happy to send it to you. Education should be free. So you've got the guide and the link we'll send you to. And also, if anybody wants a report that we put together so you can see the type of things we look at, then please do get in touch. More than happy to help. So our resource of the week, Rob, this has been sent to you by one of our listeners.
Yeah, so a big thank you to Andrew IM, who emailed this over to me the other day. Like I said at the start, it's not one resource, but 15 really. He sent me a link to a Guardian article that I hadn't seen. I think it's in their money section. It's about alternatives to Rightmove. Other property portals are available, as we always say. We tend to talk about Rightmove a lot. We had a whole episode on it. We are a bit obsessed. But there are others that focus on different things. This article, which we're going to link to in the show notes, that was in The Guardian, has got 15 alternatives to Rightmove. So it includes one called Unmodernized, which is especially, I think we've mentioned this before, it's especially for refurb projects. There's another one especially for repossessions. There's one called Property Snake, which allows you to search by postcode for prices for properties that have had their prices cut. There's Tepillo, I don't know how you say it, but that's Sarah Beanie's one, which a listener actually emailed us about as well, asking for our opinion on it, and we had to confess that we'd never used it before. So that's on the list as well. There's absolutely loads. So it's worth going and checking out this link and seeing if there's a property portal that specialises in the kind of thing that you're after, or maybe just broadening out a little bit. Well worth checking out.
Yeah, absolutely. Thank you for sending that in, Andrew. And also, just on a side note, I'm trying a resource, you could say. There's a website called Bulletproof Executive, which is really interesting. Have a look. They've got a podcast as well. I have to say, I find it a bit long, but the website I think is fantastic. Basically, the website is looking at hacking your body. So I know, Rob, we talk about hacking things, processes, making things simpler or more efficient. And this is a way of hacking your body. Now, I'm not a doctor. I'm not now saying, I'm not giving you dietary advice or anything else, but I've started taking the bulletproof coffee, as they call it. I've used a slightly different variant to the one they sell on the website because it's a US website, but I did my research and I've started to use that. I'm only a few days in, so I'm not going to report yet on how it's been reacting with myself and the benefits, but just so you know the reasons behind it, it has two benefits. One, apparently, is it helps with weight loss. And second, energy as well, energy levels, high consistent levels of energy. Now, I'm not too bothered about the weight loss, although my wife would say I should be. I'm actually focused on the energy levels just to stay focused for longer. It's interesting. I'm having a look at it. I'll feed back in a couple of weeks the progress on that, but we'll link to the show notes as well. I'm not recommending it. I'm just telling you what I'm doing. But I'll let you know in a couple of weeks how I've got on.
Well, I know that the quality of the podcast is closely correlated with our caffeine intake, but I'm a little bit scared. Am I going to be able to get a word in edgeways if you keep up this regime?
Well, I think that's we'll see, because today I'm actually running on zero coffee because we're recording this quite early in the morning. So we'll see next week. I'll have one just before. And if it's really, really fast, and I'm talking all the time, then you might know that I'm slightly overdoing it.
Okay, well, you might need that next week because we've got a really big episode coming up. It's the long-awaited listener questions episode. We've been saying we're going to do this for a while. We've had so many questions. We've been saving them up. We're able to spend ages preparing for this one and make sure we give you some really great answers. So if there was a time for body hacking, this is it. So next week, listener questions. Hopefully that's going to be a really, really great episode. So if you've ever asked us a question, hopefully we've already emailed you a reply, but we'll be covering it on that show as well.
Yeah, really looking forward to that one. So just leaves me with to say bye-bye.
Bye-bye. Thanks for listening to The Property Podcast. Make sure you join our mailing list at thepropertypodcast.com.
And remember, we love 5-star reviews. Rob even loves them more than air miles.